Here we go. Alrighty, we got our first question from PC member Zed. I'm going to invite you up to speak, buddy. Ask your question.
Can you hear me?
Yes, we can. What's up, buddy?
Perfect. So, can I ask two?
Yeah, you can ask. Time is yours.
Okay. All right. So I'm gonna ask the first one that I asked in the chat earlier, which was, why do you choose the stocks on your watch list that you do?
Okay. So the simple answer is first Dagan kind of simply creates that, and I wish I could have him here to explain some of his reasoning, but I can explain for him. So the reason I focus on the daily watch list and the most important gappers. That's the list that I look for. I make him only give me generally 2 to 3 because what I've done is I've given him the criteria I look for. He's traded with me for several years. He knows what I look for my favorite stocks. So all he does is he scans the market with my set of criteria, and he finds me the best ones. And often, or lately, they haven't been very good. However, in a hot market, if we have multiple, he will kind of bring up why he's chosen those, like a good pre-market setup. It's up 150% and it's only had one 5-minute pullback. Certain things that show signs of parabolic momentum that I would want to trade, he puts on that list. Other things he does, he puts some catalyst, he puts today's earnings, he just looks it up, top stocks and top trending. I don't look at those lists, but basically that's just, he goes on StockTwits, sees the stocks that have the most amount of buzz among retail traders, and then he puts it on that list. AUST was also an IPO he put at the top of our IPO list, and it's halted going up. So he kind of keeps us in the loop with some hyped up IPOs too. But basically all I look for, my man, is the most important gappers. I don't look at anything else generally. I know a lot of you guys do, but because I'm a gap trader, a momentum trader, that's what I look for.
Yeah, that makes sense. And then my second question was, when do you pull profits, like for yourself, like pulling them out of the trading account?
Good question. I actually was asked that earlier this morning. So when I start to pull some money out from profits, I do that at the end of the month. I do my draws. I kind of look at the month, look how I've done, percent gain wise, dollar amount wise, everything I can kind of look at. What I've done better at. Say I've lost a majority of my losses from red to green moves. Well, okay, red to green moves might not be prominent leading into the next month. That's when I pull out all my money. So I start with a $100,000 account, and from there, all my profits afterwards. So say last month I ended up with, I think it was 117,000. Wasn't the best month. I came up short in my goal. I deposited 17,000 in my account. From there, I have a savings account where I'll deposit 30% of my earnings to save for taxes. Hypothetically, if I can't come up with more write-offs, and the other 60% gets diversified generally into more investment accounts. I've found about 25% of what I make for my bills. My bills are relatively low, generally less than $2,000 to $3,000 a month. So I usually just put $4,000 to $5,000 in my checking account for things like that, and then the rest go into more investment accounts. But when you do your draw at the end of the month, make sure you do set aside, depending where you live, 30% or so if you live in the United States for taxes. It's just it's the way it is. If you don't come up with solid write-offs, it's going to hurt you. We have a gentleman we'd love to bring into our team. We're also going to be bringing on our podcast, talking about how to properly kind of save for taxes, how to use them, how to use proper write-offs. He's certified. He's a certified day trader, accountant. He's pretty cool. His name's Tim. So that's one thing that I would do is make sure you have a savings account for that. Now, if I have a red month, I had a red month in August. I know I'd spend some time coming up on almost a year. I will have to put more money into my account. I've done that before. August I did it. June I did it. I think I also had a red month in February or March, one of the two. So I had three red months last year, and I've had to actually put money into my account. But usually, as long as it's at a steady 100K, that's what I do, and then everything on top of that, I pull out. So, for example, March was a really good month. Made like February was a really good month. Made about 32,000, 35,000. So deposited all that right to my account. Hopefully that helps answer your question. Alrighty, cool. This time is yours, guys. So any questions you have, feel free to either text me in the premium chat, or request to come up on speaking. Bear's got a question. Get you up here. Do Bear first, then Bryce.
I was wondering if you can break down your short from today.
Yes, I can. Excellent question. Let me do this. Again, guys, this is going to be pre-recorded, so what I'm going to do after this is I'm going to, this is easier. I'm going to put it on a private video for you guys so you can watch it. I can't share my screen in this, unfortunately, so I'm going to have to break down my short. Actually, let's do it on Moomoo. That'd be a little bit easier. Okay, so looking at EHTH, right? Why I decided to take this short, get my Discord down here. There's a stock we traded yesterday. It was EV, I forget it. It was very close as far as ticker symbol goes. EV, what was it? It's up here. ENVX. Okay, so yesterday we traded VX for a long trade. For example, this was the same exact setup. On the 1 minute or on the 5 minute chart, there was not a single red candle. It's since open for about half an hour. It's grinded up straight. Now the reason why that's not a good thing is because pullbacks are actually healthy for stocks. You want to see a stock have a pullback every 25-30% gain or so. If you have a stock that just grinds up there without a single pullback at all, generally the first pullback ends up being its last. So what I saw on this chart was on ENVX, the first 5 minute pullback ended up being the end of its move. Because I bought for the break of 12, and then I think I sold it for like 12.05 or something like that. Now I couldn't short the stock. Then going over to EHTH, it was the same exact setup. Hadn't had a single 5 minute candle since open. Straight 20 minutes of momentum off of lighter volume generally, and then it had a inverted hammer candle. If you look at the last green 5 minute candle, look at that inverted hammer, meaning the wick is at the top and the base of the candle is at the bottom. That shows weakness. That shows a good sign of it reversing. And then at a 5 minute candle that closed red, even more confirmation it was going to continue to go down. So I started shorting I was a little late to it, about 1065. And then I added when it broke below 1050 because I saw it was holding it as a solid support line. And then I knew 10 was the next solid support. So then I shorted it from an average at 1060-ish, 1055 down to $10 for about a 5% gain. Now I did cover some of my short at 1020, and then the rest at 10, I think it was 08 or something like that, 1012, because I saw a lot of dip buying on the level 2, and then there was a new 5 minute candle that formed, and generally, if there's a new 5 minute candle that forms, you can start to see them kind of gap up higher, and I didn't want to lose in that trade. I really needed to lock in profits for confidence reasons, so that's why I decided to close out of that trade.
I'd just like to add real quick, not to speak for Jason, but a trade like that, comparing it to, in this particular instance, what happened to a stock yesterday, it's really just adjusting to what the market's doing right now. So you got to adapt sometimes.
Exactly. Thank you for bringing that up. We talk about as traders always having to adapt, and that doesn't mean always changing your strategy up, but you have to be welcome and open to change. I realized that this week, we saw again this morning on RVN, whatever it was, that breakouts were just not there. They're getting rejected super harshly every single morning. Even on the retest, it's getting rejected, falling 10% or more. So we have to find new creative ways to, make money, adjust our strategy. And that's all we simply did this morning. We found a similar pattern from what happened yesterday of a similar stock within the same sector, and we just played it exactly how we wish we played it yesterday. We were given a new opportunity today, and I feel, in my opinion, we executed perfectly on. Good ad, Corey. We're simply, as traders, we have to be able to adjust to certain markets, and that's why a lot of these old traders are just not having a good time trading right now, and they're struggling to outperform the market because when they started, we saw an influx of retail traders in the dot-com bubble. Halts were not a thing. Stocks would rip up thousands of percent without any halts, and even before then you'd have to call in to buy. And then as traders get better and better, a newer thing is short squeezes. We didn't see many short squeezes in the last 15 years. A lot of these Reddit hype social media stocks is something that's new that old traders aren't used to, and they're getting smoked on because they're like, there's no way that the stock that's going bankrupt can soar up thousands of percent. So they start shorting, and then they get waxed on their short. I've seen it. I've seen the P&Ls of these guys that have done it. It's not good. So you have to be able to adapt, to certain market conditions. And this week, breakouts have just sucked. So obviously I'm going to be waiting for retest next week and tomorrow and Friday. But if we start seeing stocks break out like they've been, we're going to continue to try to make money on the downside. Okay, Bryce was next. Yo, Bryce, what up? I don't know if he knows he's on the stage yet. We'll wait for him. We'll bring F00 up here. I think I accepted your F00. Can I just drag you up here? No, I can't. Can you accept the thing to come up on the stage and ask your question, kind sir? There you go.
There we go. It works. I don't know. Could you explain, like I'm 5 or something? I've done stock trading. I've done options trading before. How did you initiate your short position? I trade on Robinhood a bit. I know that's kind of not too popular nowadays. I have Webull. I did get on Moomoo, and it's just something I've never ticked off before.
Yeah.
Any more background than that would be great.
So, like basically, how did I get into my short position? Is that your question? Okay, cool. I actually have a lesson on this, how to short and how to enroll in the hardware program. So I'm going to copy this link, and I'm going to send it to you. Or if you want to go to just premium lessons and go to number 7. It talks about basically how do I get into my shorts. Now, I wasn't planning on shorting this today. I honestly accidentally got into it, and then I realized, I can short it. So why shouldn't I just focus on actually shorting the stock? Because I bought 2,000 shares, and then I ended up selling 2,500 on accident, and so then the broker thought I wanted to short 500. So then it's like, game time. I actually can short this, and then I added to my short position. So yeah, just watch that video. It talks about how to do it, how to execute on it, and how to make sure you can short, some of these stocks.
If you have any questions after you watch that video too, you can DM one of us and we can answer your questions from there as well.
Okay, Jesse had a question. When someone begins a short, does it show first at level 2? Place an order to buy back. Would it show the bid? Seems like it'd be deceiving, but maybe I'm thinking about it too much. Yes. So for example, if I start my short position, it's going to come up as a sell. It's going to look like someone's selling that stock, and then when I buy it back, like that's me covering my short. I'm technically buying those shares back. So it will actually come up as a short. So when I click the short button, it will actually come up as, like on the level 2, as someone selling. You can't tell the difference between, is he selling a long position or is he starting a short position? It'll just say he's selling short. And then when I go to buy him back, it will look like someone's buying. So, for example, like when you see a lot of these short squeezes, people are covering their shorts, and it looks like there's a ton of buying pressure. I mean, in a sense, it is, but a lot of it is people covering their short positions. Okay, so Bryce's question or mic isn't working, but you could just text me your question. You can go over it.
So how our process works is that I would send you an application, it's free of charge, you would fill that out, I'll send it to you through your email. You fill it out, send it back to me, I give it to our broker, and as soon as you're approved, then you're more than welcome to go look at the property.
Shoot, not looking at the right place. Bada bing, bada boom.
Let's start with your name.
If I didn't need a constant boost, would I hold that short position longer or not? The answer is yes. That's a good question. I try to be as emotionless as possible, but even this many years in, I feel like I am to a certain extent. But there's still man, I just need a win. So because I am selective, I have a much higher win percentage than most traders. I do, and I like to boast that. And so I'm not used to taking L after L after L because I only average 1.5 trades a day. So on my last 5 trades, if 4 of them have been red, it's very abnormal for me. And honestly, I was excited. I'm like, this is going to be a good trade. So I sized up, which could have been a mistake, but I also was quicker to lock in profits. Another thing is I haven't shorted 1,000 different stocks, so I don't have an excellent strategy. I don't have an excellent I can't say I've been shorting for years, so I know how to. I'm not a perfect shorter. For example. I'm not sure if I would be an entirely profitable trader. I think I would, but if I could only short stocks, I haven't done it enough. For every 20 trades I trade long, maybe 1 is a short. So I haven't had the practice really to know when the perfect time to really cover is, because there's just different rules to trading stocks on the downside, which I'm going to get better at. But I didn't start shorting until 2021, so about a year and a half I've been shorting. I didn't short during COVID. I honestly just didn't think about it. So one thing I could have done is maybe a break below 10, holding for a break below 10. But even right now, it's literally at 10. It's at 9.99, 9.98.5. So it's validating as a decent support line. So maybe it could have held for a while longer, because if I go to ENVX or whatever the last one we traded, it's down to $6 now. It's down immensely. So maybe it could have held some short, but I don't have the practice, in my opinion, to say I'm a perfect short trader. El Profeta, I got a quick question. Can you give me some details on the difference between the bid and the ask price? I find that a bit confusing. Corey, can you take this one? Actually, I gotta get some water.
Yeah, sure.
Cool.
So the difference between the bid and the ask is what we call the slippage, or some people call it the spread. And what that is basically if you want to buy or sell, so you're buying on the bid or you're selling on the ask, that's the price you're going to get filled at if you use a market order. So let's say the bid is 90 and the ask is 89. That's $2 slippage. So as soon as you enter that position with a market order, you're automatically going to be down when you go to sell whatever that slippage is. So when we talk about slippage or spread, that's basically how much you're going to be down when you enter the position. And generally speaking, we always would rather use limit orders or stop orders. It just doesn't always work out that way, especially sometimes with high momentum gappers. You just have to use market to get in and out. and we basically want to see slippage, which again is the difference between the bid and the ask. 2, 3, 5 cents max. A lot of these, especially IPOs, you'll see just have insane slippage. So, and because they move so fast, if you get in and out on market, you could lose money even if it went up, just because of the slippage.
Yes, it's happened, and you're like excited, like I just slammed a green trade, but because the slippage could be so much, you're like, geez, man, like I didn't make anything. And just a quick refresher: the ask is the lowest seller, and the bid is the highest buyer. Easy way to do it. So basically, if you want to get guaranteed, if you want to guarantee to buy, you're going to buy off of the ask. If you want to guarantee to sell, you're going to sell on the bid. Just little thing there for you. For example, if the market order was at 10:07 to buy, generally if I click market, I'm pretty much buying on the bid. Or sorry, buying on the ask. Said it wrong. Okay, Bryce said he's got his mic working. We got David in the chat. We got some.
Hey, can you hear me now?
Yes, we can.
Okay, perfect. My question is, so I'm trying to limit myself to 2 trades a day or 3 trades max. And that's easier said than done.
Yeah.
If you're down money. What is like a good thing for a good mindset?
So for me,
that?
I'm an extremely competitive person, and a byproduct of that is I hate losing. I mean, I could be playing something I absolutely have no idea how to play, a silly yard game, and I'm going to make sure I win. That's just who I am. Now, same thing goes for stock trading. I hate losing. But losing is good. Losing keeps me in check. Like I said today, if I was guaranteed profit every single day, I'm not sure I would enjoy it as much. You have to lose in order to enjoy and respect the game. So for me, I have to accept I'm going to lose and be okay with that. Because if I'm not, I have to figure out a way I can be okay with losing. Because no one has a 100% success rate. Even long-term buyers. I mean, you saw Bill Ackman lose $500 million in 2 months on a Netflix buy. Even the best of the best still lose. So another thing is when you lose, you like, for example, I walk away at 10:30 generally no matter what. The reason I do this is because what I found is my win percentage after 10:30 sucks. I end up, a good majority of my losers would happen after 10:30. So just realizing that by me walking away, I'm losing less. It might not sound good because, oh man, I'm down $1,000. I really just want to trade on back in the green. But that is super dangerous for 2 reasons. One, if you were to keep trading, you're going to compound your loss more than likely, and you're going to lose 2,000. Then you're going to be like, why did I just walk away when I had only down 1,000? But the second thing is, now you're trading to get back. You should never trade to get back. You should solely trade just to trade to the best of your abilities. Meaning, is this a good setup, or am I simply taking this trade to force an opportunity that was not there to begin with? That I have no. I should not be trading it. So one thing that helps me is after I'm done with a few trades, after I'm done with 10:30, and if I'm down on the day, I gotta accept it. Okay, I lost. It sucks. Get over it. Tomorrow's a new day. It's a new week, new month, whatever it is. You got to be okay with losing, and you got to walk away, because what you're going to find is if you keep trading just to get back, you're going to end up losing more 9 times out of 10. You just are.
I 100% agree. I've done it.
Understand
and
that.
that's why we want to win, obviously, more than we lose, but also we want to keep our winners bigger than our losers, and we'll always be profitable that way.
Yep.
Thank you.
You bet. David, you're up on the stage here. You got anything to add to that? I think you have, because you have such a high win percentage, you may have something good to add. You might be in and out of work or something. Okay, cool. We do have time for a few more questions. Again, guys, this is your time. I do enjoy doing these. I appreciate every one of you guys for joining, because time is your most valuable asset, and you choose to spend it with me. This is a lot. I really do appreciate you guys all for joining. So with that being said, we got time for about one more question, and then maybe two. Enjoy your guys' day. Some people kill me. I unmuted. I see that, but okay, this is gonna be weird. I'm gonna drag you down to PC Team Training chat, unmute you, then bring you back. Okay, now request to come up on stage. Mr. 107. Oh yeah, you guys did direct message me some questions. While he's doing that, I might go through my list here to see what I got.
Can you hear me, Jason?
I can.
Okay, sorry about that. So my question kind of went back to the bid and the ask, and by the way, that last question was a good question, an excellent answer about walking away when you're up or down, just learning to accept it. That's really been hard for me. It happened to me yesterday. I had 2 green trades, and then I had a red trade that took both of my profits. It was pretty dumb, don't ask. But anyways, moving on to my question. So there's been times where I put in a limit order on the ladder, and it touches it, but I don't get filled, and then of course it drops, and I ended up moving down my limit order and getting filled. So I guess my question is, say there's, on the ladder you see the 200 there for people who have orders and shares waiting to sell. So when it gets up to that price, and I put mine in at the same place, and it gets up to that price and it taps it, and it only fills some of the orders. Is it literally just who was there first? Does it fill the smaller orders first and the larger ones, or how does that work?
I've thought about that. Like, does it make more sense to fill larger orders or the ones that are first? And because when you place your order on an order book, I believe, I could be wrong, but I firmly believe because you place your order on an order book, and this is how it used to go 20 years ago because I did a lot of studying, it would just fill whoever was first. Because because I trade with such large positions, I've been partially filled before, meaning like, okay, take 500 shares, but we're not going to fill your 5,000. But what I say to that is, if you find that happen and it taps your limit and it doesn't fill it, it might be a blessing in disguise, because oftentimes that means it's going to lead with a strong rejection and a double top. So usually when that happens, I'm almost like excited, like, oh man, thank you God for not filling my order, because there's some people that are going to lose out in this trade because it was tapped and now it's going down. So that's one thing I would watch out for.
Okay, that's a good way to look at it too, with a better positive mindset, because I looked at it like, oh my God, it's going to keep falling, and instead of getting filled at this price, I'm going to now have to, take off whatever cents per share just to get filled. So.
Yep. Okay. Sir Drunk Robot Puppy says, how do you decide what to trade and what not to trade when things hit your scanner? So it all really depends on the pre-market setup or just the setup period. Obviously, 1,000 things can hit my scanner, but if I'm not at least a little selective, I'm not. I'm going to be watching everything, and that's not a good idea. You want to be as selective as possible. For example, I like to only look at 2 to maximum 3 stocks at the same time. You guys have seen pictures of my setup. I have 4 screens. One is my scanner, one is my Discord, and I have 2 that really are used for trading. And oftentimes, I'm only watching 1 or 2 stocks. So what I'd say is when stocks do hit your scanner, because it's already met my criteria, I don't need to ask if it meets my criteria. One thing I do have to make sure, though, is that it's a quality setup, right? I can sift through 1,000 stocks, and only 2 of them I might be willing to trade. So just, I guess, ask yourself, is this a quality setup, or am I simply only trading it because it's hitting my scanner? Because I can have a lot of stocks meet that criteria, and none of them have a good setup at all. Just because it meets that criteria doesn't mean I should buy. You have to come up with a formulated plan, and does it make sense given its setup? If that makes sense. We got F007 back on the back for another question.
Thanks. I was just wondering, do you have any kind of macro or hotkey setups so that you can execute your trades better?
Yes. Sorry, continue.
Go ahead.
No, you go.
I was just gonna say you can have these great finds, and then if you don't get your orders in promptly, you're gonna miss out.
100%. So this is a two-parter. Thinkorswim, I have the active trader layout. So I don't have hotkeys. I just have to click with my mouse, which sucks. But the active trader does help me get in positions pretty quick with the stop limits and changing a stop limit to market and things like that. However, Moomoo has far better hotkeys, and that is like the number one reason of why I want to switch, is because their hotkeys are amazing. I mean, you could talk to NWD. He's probably the most experienced trader on Moomoo right now. I'm struggling with it because I've used Thinkorswim for 6 years. To switch over like that is hard for me, but their hotkeys are amazing. So example, if I click Shift 4, it's sell a quarter. If I click Shift 2, it's sell half, and Shift 1, it's sell all. I can help you set up those hotkeys in a one-on-one lesson if you want. Then caps 1 is buy all, and then buy all like I can possibly buy, which is I'll never click that more than likely. And then caps 4 is buy 25%, and then caps 2 is buy 50%. So Moomoo has excellent hotkeys. Thinkorswim doesn't, but they have the active trader, which helps me get in and out of positions rather fluently, I should say.
Great, thank you.
And Tomcat says, I love the hotkeys. I use them religiously. It's so much better fills in Moomoo. So he's saying he's actually getting better fills, and I can confirm from Noah, we traded the same stock, and I used a stop limit order, and he used hotkeys, and he actually got, and he bought them after it broke the pre-market high, and it still filled him a few cents better than I did. So something I should look into, but I really need to make sure. I know every inch of that platform. Because if I'm on it all the time, I have to be able to teach on it all the time, and I'm more confident on TOS than Moomoo right now. But I will switch eventually. So last question here. Our boy says, what is the best, easiest starter trading setup? Brokerage, TD Ameritrade versus Moomoo, or others? And what would your first investment to make right now? So the beginner, you can kind of get in a beginner trap. A lot of people say like, Robinhood's a better beginner platform because it's simpler. Well, the problem with that is, yes, the barrier to entry is easier because it's easier to understand, but you're only going to be a beginner. I know there's people that trade options on Robinhood that probably make money, and yeah, I know. But the problem is it's very limited on everything else. Great beginner platform, yeah, sure. But I'd rather you start on a more advanced platform, learn on a more advanced platform, and then take longer time to learn. But then when you learn, compared to a Robinhood user, your knowledge is going to be so much better, and your numbers are going to be so much better than a Robinhood trader. In my opinion, it's not even funny. Robinhood wasn't built for day trading; it just wasn't. So Moomoo versus Thinkorswim, I use both for different things. Obviously, Moomoo provides things that TOS doesn't. TOS provides things that Moomoo doesn't. I know I'm weird. I do that. You're going to find some traders actually do trade on multiple platforms. I know Ross Cameron does. It's just like I don't have like an all-in-one like I'm using this right now. So if you are a beginner, what would I rather choose between the two? The reason why I'm going to say Thinkorswim is, in my opinion, I think their paper trading platform is better than Moomoo's. So if you're beginning, I'd rather you learn to paper trade. And honestly, on Thinkorswim, from what I've found, I haven't played on Moomoo's paper trading platform, but I think TOS is probably better if I had to guess. But Alrighty, guys. Well, that was a two-parter question. Let me go back to answer the rest of them. He said, "And what would be your first investment if you were to make right now?" My first investment. I personally think knowledge is the greatest investment. That's why I'm always buying other courses, other video libraries, a lot of mentorship, because I personally think knowledge is the greatest investment. I know you guys want me to say this penny stock because it's going to go to the moon, but in all reality, the best answer I can give you guys is invest in knowledge, because you're going to receive the greatest reward on that investment than anything else. It's just a fact of the matter. So the simple fact that you guys are in here, you guys are giving me your most valuable asset, which is your time, shows me you guys are ready to learn, and I really appreciate that. It doesn't go unnoticed. It means a lot to me that you guys are giving me your time. So that being said, that's going to wrap up today's group lesson. We are going to continue to do these weekly, so some of you beginner guys can learn quicker. And catch up to speed with most of the team here and start making money ASAP. If you guys have any more questions, like Corey said, don't ever hesitate to direct message me or Corey or any of the members up here. We will help you out. The May calendar is out for the one-on-one lessons, so if you guys haven't signed up for yours, make sure you do that. But other than that, guys, I'm going to exit the stage quietly. Have a good week. I'll talk to you guys tomorrow. Today's today Wednesday, Thursday, or Friday?
Wednesday.
Today's Wednesday. Oh my gosh. Okay, we got 2 more days of trading. But I'll see you guys on the trading floor tomorrow. Peace, guys.
Have a good day, guys.
So right now, this is actually
It's actually